Hey guys, hope you are all having a great morning today. On this glorious morning, we are going to talk about everyone's favorite topic, the housing market, which at this point is more of a fossil, a thing of the past, because this video's title is not hyperbolic in any way. If you don't own a house, and you are not going to inherit one from a family member, the chances of you ever owning one have just dropped. I mean, it was already hard to get a house, especially if you were a millennial and even more if you were a Gen Z, but now, it's quite literally almost impossible to get one, and I am about to explain to you what has changed so quick and sudden that I have to bring this news to you. The topic is very negative, but it is incredibly interesting at the same time, so buckle up because this video is going to be the most fun you have had this entire week. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. First and foremost, let's discuss the effect that the pandemic has had on housing affordability, which sadly is often ignored or even worse, negated by some people. The American dream of achieving homeownership has solidified and truly become that which it's named, a dream. The pandemic has brought in a surge in home prices along with a sharp decline in the number of houses that have gone for sale. It has made buying a home, especially for first-time buyers, a very difficult and steep road. At the end of 2021, there were 411,000 less homes on the markets that were considered affordable for households that earned somewhere between $75,000 and $100,000 than before the pandemic. At the end of the year 2019, there was one available listing for an affordable home for every 24 households. By the end of last year, there was one listing for every 65 households, and the numbers are set to continue increasing. The reason why the pandemic was so impactful to the housing market is because buyers had the advantage to apply for low mortgage rates and move into bigger houses. This drove the supply of homes for sale, which was already dangerously low pre-pandemic, to completely slump flat on a graph. As we have also talked about previously on this channel, home builders have slowed down the pace by which they develop housing, and are actually producing less affordable housing, instead opting out to build more expensive ones. All these factors combined lead to one scary result that we non-homeowners will have to seriously contend with. We will have much less buying power than any previous generation ever before in regard to housing. I know there will be some avid defenders of the system as it is down in my comments, blaming a lack of financial budgeting and attitude as the main factor bearing newer generations from achieving what has become the traditional route for American families, which is owning a home. To these clowns, let me pause at the next set of data and we can argue later. As more homeowners continue to get priced out, especially by Wall Street-backed companies who offer 20% above asking price, their inability to buy homes will have very serious ramifications for our future. With little supply to buy from, renters are living a pipe dream, raising rent prices almost twice a year because the demand is just so high and concentrated in particular areas. Because rents are blowing through the roof, with people often paying twice what they would normally pay for a mortgage, it will make it very unlikely for them to be able to save money to enter the market in the near future as well. Both options erode affordability too quick. Let me give you another depressing statistic. The Pew Research Center considers the average household income to bet between $43,400 and $130,200 to be middle class based on income data from 2020. Households that earned between $75,000 and $100,000 could afford to buy about 58% of the active housing inventory back in 2019. As of 2021, that number fell down to 51%, and by the end of this year, it will be below 50%. This percentage point drop is the second biggest decline among all income brackets. According to economists as well as interviewed real estate agents with good experience in the markets, we can expect the number of homes for sale to rise this spring, but with rising problems with supply chain delays, we can also expect unforeseen slowdown in builder activity. While these setbacks hammer down on the small improvements the government tries to make, you can expect housing and rents to continue climbing. I read about a young couple in their mid-20s that were interviewed and said that they were preparing to buy a house 2 years ago, but that the market is completely different today than what it was then, forcing them to raise their initial budget for a house from $200,000 to $300,000. The typical mortgage payment for a single-family home rose from $1,039 to $1,240. Homeowners are seeing little relief as prices compound at unforeseen rates. The media price rose by more than 10% from 183 metro areas in a single year. This is all really frustrating, as it makes millions of prospective buyers feel hopeless in their wishes to achieve their lifelong dreams, and sadly, things are not looking like they are going to cool down, not by any margin. If you are a home buyer that was hopeful for market conditions to ease and freeze the competitive market in housing, it's time to take the red pill. Realtor.com shows that the real estate market is starting off just as competitive as it was in 2021. Median listing prices were up 10.3% in January 2022 on the website, compared to January of 2021. This represents a 25% jump over the median listing price in January of 2020. Statistically speaking, both buyers and sellers enter the market slow during the months of January, but this year, the only ones waiting to jump in are the sellers, who enjoy a nice position as all the variables are in their favor. Concerns about potential surges in new variants and shortages of homes are driving the prices of homes alone, let alone all the manipulation taking place by Wall Street. Some experts say that price appreciation is anticipated to slow down a bit later in 2022 when interest rates are expected to rise, so we will see then what change, if any, takes place, but I highly doubt it will be anything significant. As you can see, there are a lot of influencing factors that are making housing affordability impossible for people, but the social perception of what is driving this gap in thinking varies greatly by generations. A cross-generational consensus study was done, with people from all generations being asked 2 questions. The first one was, is it young people's fault if they can't afford a home? 4% of Generation Z said they had no responsibility, while 18% said they only had a small amount of responsibility. By contrast, half of baby boomers said they had little or nothing to do with it, including 3 in 10 who absolved their generation of any responsibility. This was actually a bit shocking to me, because I expected a much harsher response by baby boomers, but they seem to understand quite well what is happening. The second question was, are older people responsible for the current price of houses? Younger people tend to think so, though older people themselves disagreed. I will also note that this poll was carried out in Britain, and I have a serious feeling that these poll numbers will drastically change if the same poll was carried out in the United States. I think in the United States, there is a wider gap between older and younger generations, and there is this consistent conflict between different generational groups blaming others for the shortcomings of society. Still, I find it pretty sad that we blame each other for things that have little to do with the general attitude of people and more to do with the lack of regulatory oversight by the government itself. Politicians are easily bribed to look away and let problems be, because Wall Street is making huge profits from hurting Americans. In fact, do you guys want to know what the next big step for Wall Street is going to be? According to some reports, Blackstone purchased America's largest rent-to-buy company, Home Partners, which owns about 17,000 houses in the country. The model of rent-to-buy has been around for quite some time, but with Main Street putting real money into it, it could shift the consumer real estate market, and Wall Street is not going to let this happen without their say in it. The model words very simple. Companies acquire thousands of homes and put them on the market as rent-to-buy, which means you enter into an agreement to get the home as a renter but get the option to buy the property outright from the owner at a future date. With housing prices blowing up and people being forced into renting, the rent-to-buy model became very popular these past couple of years. Banks believe and are beginning to bet on the rent-to-one model because of the increased focus on single-family home rentals. The return on investments will favor investors, because a portion of the renter's rent goes down a down payment on the home. It is important to remember that affordability is becoming a serious problem, but it hasn't necessarily been the only problem for home buyers, at least not until now. Inventory problems have honestly been the predominant factor bearing people from home ownership, with affordability slowly creeping up and now reaching similar levels. The shifting market preferences from an aging millennial population are being observed by Wall Street analysts. CEOs are beginning to talk about what it means for them and the market overall to have millennials and Gen Z not see traditional homeownership as realistic or responsible financial decisions anymore. They have been watching with great interest how newer generations have instead preferred to accumulate wealth by hitting the stock market via accessible mobile apps and by investing in alternative currencies like crypto. If their business models rely on selling housing to people, they are going to have to follow the trend and continue to amplify the amount of rent-to-buy agreements that they engage with. I personally think it's really sad that we are at a point where home ownership has been so deprived from people that Wall Street themselves are having to go around and make new ways to make it available in order to keep profits coming in. Yes, they buy houses to rent them, but many times because of changing demographics, They do have to get rid of the houses they bought and are now having to contend with a generation that has given up and set life goals in a different place. This was a bit of a review for some of the data that has recently come out summarizing the changes that took place last year in the housing market. The numbers are just as ugly as the inflation numbers that came out last week and make the famous saying of "you will own nothing and be happy" all the more real. Let me know in the comments if you liked the video, and what your personal experience and observations are related to the topics we discussed. Personally, out of all my friends, only one has a house, and he only got it because he inherited it from his father when he passed away. Everyone else is living at home or living with roommates. When I bring this topic up, most people don't want to talk about it. I think they find it embarrassing to say that they have failed to live up to the expectations of past generations, which is totally understandable. Let me know what your thoughts are, and for the love of tendies, join my Discord already. I promise you a good time in it. I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Hope you keep having a great day, and I hope to see you later today on the recap video. Until then, keep on buying the dip into the moon.